Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, January 2nd. The year is 2020. Let's talk trading. Starting. It's the new year, or it's the beginning, starting. The thing about starting is, especially when you're starting something new, that first time, it takes courage. A lot of people are afraid to click that mouse on that first trade. It's not just about trading, it's about life, starting something new, that a new job or a new school that first day. Or maybe you're in a band that first time you get up on stage in front of a large audience. Or maybe you're starting a new hobby and you just don't know exactly how to do it. And those first attempts. The thing about starting is you control when you start, how you start, but it's that ending. It's the results that are produced. A lot of times, they're not in your control at all. There's so many factors that go into it. So that's why I'm talking about starting now, because in trading, you enter that trade, you begin that trade, you start that trade, but there's, hundreds, thousands of traders around the world that are going to affect the outcome of your trade. And it might just take one trader out there somewhere that decides to go the other way. And instead of you exiting for a win, you exit for a loss. And so you see, that's why you have to have your money and risk management in place. You have to make sure you don't lose more on any particular trade than you're willing to lose. We've started the year, right? You got your new trading plan, and you know what your new risk factor is for those trades. You got to put that stop loss on, because in the moment you say, oh, I've got a mental stop loss. Oh no, emotions might kick in and you might give it just a little bit more room and a little more and a little more, and next thing you know, your account's in jeopardy. So, fellow traders, just remember, these videos are for educational purposes only, and your results may vastly differ from mine. And as I just mentioned, trading's risky. You could lose all your money and then some. So, if you're looking for trading advice, financial advice, investment advice, please seek out the advice of an accredited financial professional. That way, if you lose all your money, you know you got your advice from an accredited financial professional rather than some guy's YouTube video you watched or something you read on a trading forum or blog out on the internet. Okay, we're looking at the weekly chart for the dollar yen right now. And you can see it's 32 pips off the bottom and 94 pips off the high. So it seems like these first trading days of the year, there's a lot of movement, because we usually don't see days like this. Well, actually, let me back up. This is the week, but we'll look at the day right now, because you can see the day is at 65 pips of range. And as far as the open goes, you can see we're 19 pips below the yearly open so far. We got a nice day range. Now I want you to notice something here on this chart. Remember I talked about this big candle here, how price needs to return. Then I said if it gets down to here, you might want to consider a short. Well, as you can see, that short was worth about 10 pips. And we entered the first day of the week's range, got up to 108.86, and then price dropped. So if you took that short, right now you'd be up 23 pips. And technically, we're still on the first trading day of the month here. And for the week, you can see what's happened. Now, remember, I talked about those big bars, and we were looking at daily, but you see here on the hourly, we got this big bar, and price is trying to get back here. And I could probably show you a trick on that, but I don't know if I'll get to that today or not. Inside bar, once again, we penetrated into the monthly inside bar that happened 4 months ago. Price is exited, and it's up 6 pips at the moment. The range, we've got 6 over 100. And you can see here how price exited through the previous day's low and was good for about 25 pips if you nailed that exit. On the holos, the yearly H1 lowest open right here, considering it's the first day of the year. After that big drop, you can see here a nice move to the upside. Good for about 25, 26, 7 pips at the moment. When we took out the pivot, and a nice rat reversal right here. Very nice rat reversal. So the green rats got paid off the first trading day of the year. And waiting for a tick here to refresh the chart. There we go. Okay, we've got a monthly pivot right here at 108.91. So look for price to get to that. And the weekly pivot is up here at 109.47, which we've already been through the weekly pivot. Okay, so far we've missed that weekly pivot here, 109.47, just by 2 points, even though back here it looks like we had hit it, but we didn't quite hit it. Oh, let me go back. Let's just bring up the daily pivot. You can see yesterday there's a missed pivot, 109.03 or 04. And you round up. So December had a missed pivot, November, October, September. So 4 months in a row missed pivots, but that's it. Once again, price just doesn't like staying between the lines. 3 ball at the bottom, green at the line. So if you took that long at 30, you're up about 24 pips at the moment if you're still in that trade. And you can see here on the wick zones, in and out. Horizontal line trade. Once again, candle color at the line, just trading in the direction. I just opened this trading profile to make the video, so you can see we did have one long trigger right there. If you wanted to take that trade, but at the tick level, not much happening. You can see we entered the ATR zone the lower ATR zone and reversed out of it. We're still in that weekly ATR zone. So once again, looking at if price gets into the ATR zone, it's a good place to look for a reversal. You see here it even went through the lower ATR zone for the week, entered the lower ATR zone for the day, which actually overlapped the week partially, and it's turned around. For the day, 65. For the week, 127, still below the weekly average. For the squigglies, oh, what do you do when you trade squiggles? I don't know. It's just, I still cringe every time I see this. I guess because it reminds me of what I was looking at 20 years ago now. Not quite 20. Let's see. 15 years ago. But it's all part of evolution and education. You know, talking about starting, yeah, starting out looking at squigglies, RSI, moving averages, stochastics, MACD, believing in magic numbers, 5, 50, 200, 21, 20, 34. I mean, yeah, I have to laugh at myself. So I'm not laughing at you if you use squigglies. I'm laughing at myself. Each trader has to find their own way. They have to find what works for them. And that's why, once again, starting can be really tough. There's so many ways out there, so many different methods presented. People talk a lot, but there's just certain truisms that, you can see. I mean, if you look at, look here at the wick zone, you can see here all those wicks. How many times did price close above this? Let's see, let's find the highest open right here. We had two closes above that highest open on the daily. And then what happened the next day? Failed to make a new high and fell right back through those zones. So that's one of the reasons why I switched over to looking at highest high, or the highest open, lowest open for the day, and the wick zones. Because you can see here, normally highest open, lowest open is something that I do on the hourly for the intraday or day trading. But when you're looking at it from a perspective of longer terms and picking a trade bias, sometimes it's just so obvious. A lot of people say, oh, that's Harry hindsight. But no, it's Larry live or Randy real time, because this is something that we do every day. We look at these in the moment and trade accordingly. So, fellow traders, just remember, starting can be scary. But it's also showing, that first step is a bold step. So if you're just now thinking about trading, don't be afraid. You can take that first step. Just remember to put that stop loss there. And if you're just starting out, or if you've been doing this for decades, just remember, it's not what you trade, it's how you trade it. So you need to get out there and drain the banks. But I'm also going to ask you guys for a small favor. Let me bring up a screen. Okay. On Reddit, you see I still have this -1 comma. So what I've been doing for a while is on my profile, I've been posting these trading videos. So if you could go down there and give me like an extra karma point, maybe I can get rid of this -1 karma. Because what this does is it's sending the message to the world that, oh, don't watch these videos, don't listen to this trader. And this is what a lot of people do. It's happened to me repeatedly over the years, over the decades, that